Hello everyone, welcome to the Stock Trading Tutor channel. If you would like to create a free Demat account, click the link in the description and fill out your details and you will get intraday recommendation calls and also you can learn robo trading software. Now let's look at the risks in primary market, which is mainly investing in IPO. Now, first of all, let's see what is market risk. Market risk or systematic risk is the risk of your stocks losing value because economic events can affect the entire market. These events impact different stocks to different extent. For example, an increase in interest rates makes borrowing expensive for all companies. It stalls the growth projects because companies are not able to finance them. However, banks are the worst hit because the demand for loans fall. Understanding the impact of various systematic risks on the issuer company is a critical part of evaluating an IPO. Now let's look at the risks involved in primary market. Primary market investments can be risky because companies that undergo an IPO are young and their businesses can be unpredictable. There are four attributes of issuer companies that makes investing in IPOs risky: limited information and regulatory oversight, no trading history, disruptive business model, and lack of large project experience. Now, let's look at these in more detail. Here's an infographic so you can have an idea of what the four risks generally give. Now, first, let's look at the limited information and regulatory oversight. Private companies have limited regulatory oversight because they have few investors. Despite extensive disclosure requirements when going public, not every significant detail is known about the company undergoing the IPO. Sometimes it is hard to tell what market risks the company is exposed to and what measures it has to take to protect itself. Next is no trading history. Financial markets are full of risks. Each stock is exposed to these to a different degree. You need to study years of trading data to understand how susceptible a stock is to various systematic risks. But there is no historical trading data for IPO shares. That's because an IPO is the first time a company offers its shares to the public. Therefore, predicting the stock's price movements become difficult. This unknown factor increases the risk of investing in the primary market. Next is the disruptive business model. Technology companies that disrupt an industry with their innovative offerings can hit the primary market very early. They receive a lot of investor attention because of their remarkable growth in a short span. However, they can be risky investments because it is hard to predict how their business will be affected by various systematic risks. Next is the lack of a large project experience. IPOs bring several crores into a business. However, for their shares to continue appreciating, companies must invest the IPO money on good projects. Companies making a primary market issue often lack the experience of handling big projects. Also, promoters can get carried away by the early success and take up overambitious projects. This can expose the businesses to new systematic risks. Market risk measurement is an important component of equity analysis. It can be trickier for IPO companies because they are less known and operate on hybrid business models. But do not let this dissuade you from investing in IPOs. IPOs are a great opportunity to make big returns. Just do your homework on the issuer company and you will be okay. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you would like to create a free Demat account with Alice Blue, click the link in the description and fill out your details and upload the required documents. You will also get the benefit of intraday recommendation calls and you can learn robo trading software.